Um, and that deficit is what, call it 300, 400 million ounces. I mean, it's huge. And this whole year was dominated by AI. You can't have AI without silver. Silver is part of so much of that application. We also heard, I guess it was a week or so ago, maybe 2 weeks ago, that there's a new battery, an EV battery that charges in 9 minutes and goes 900 kilometers, but it requires about a kilogram of silver. So you're talking about, for every battery, you're talking about 32 ounces. That's going to also increase the demand. And from the supply side, you can just see it in the vaults, all three of them, LBMA, COMEX, and Shanghai. They've just been being drained on a daily basis of physical metal. And that big smash we saw yesterday, that was paper driven. And you can see that because Shanghai, I mean, New York was down, what, $7, $8, and Shanghai was barely down $3. So that finally what's happening is the cash markets are coming out in front of the paper markets. The paper markets, the games they've played for the last 50 years, they're coming to an end.
Yeah, it's very interesting that you highlight these three different exchanges, because when you look at the Shanghai exchange specifically, it's where a lot of physical metals actually being traded. It's trading for quite a significant premium, silver specifically, compared to the other exchanges, isn't it?
Yeah, I mean, that shows you right there that cash and carry is trumping paper markets that are simply contracts. Contracts are made to be broken. And I mean, the answer is zero. But how much is a contract worth that cannot perform? Zero.
Yeah, and I believe this is called backwardation, where you have a physical market that's trading for a premium compared to a paper market. Who is really the one that is buying all this physical?
Yeah, backwardation, uh, what you're talking about there is where the futures price should always be higher than the cash price because of uh, carrying costs and interest. That's called contango. When you get the cash price above the futures price, that's backwardation, and that shows that investors don't want to wait 30 days, 90, 60 days, 90 days for their metal. They want to pay for it today, and they want it today. And now, from an exchange standpoint, as you just pointed out, the physical exchange is trading far above, and I mean that premium is blown out to $7, $8. Yeah, about $7 or $8. The cash market, the cash exchange, is ahead of the two paper exchanges, COMEX and LBMA. That is blatant, outright backwardation. It tells you investors are not willing to wait for their metal. They're not willing to trust that they're going to get their metal. They want it. They want it now.
Do you think this is a structural shift, a type of permanent change that we have seen in the silver market, and it will continue to go forward this way? And how could this potentially play out, Bill?
I 100% believe that this structural shift is it's permanent. It's what's going to be. It's the future. Paper contracts are not the future. Paper contracts are dying, and the same could be said for the dollar itself. The dollar is dying, and what's going to supplant that will be some type of BRICS currency that has some type of real backing. And obviously, this has been the BRICS currency been in the works for years and years. And I think wiping away the paper markets being able to price metal, I think wiping away that ability is all part of bringing a backed currency forward that can be trusted.
Very interesting thread there on that, remonetization that I would love to pull in just a second. But before that, what can the exchanges do to kick the can down the road a bit further? Are there any historical parallels with interventions, for example, that we can draw upon on tools they'll try to use to try to, patch the system back together?
Yeah, you're probably referring to like what happened in 1980, where COMEX said we're not accepting any buy orders, we'll only take sell orders. That was when the world was truly US centric. We were the center of the universe for finance. We were the center of the universe for a lot of things. That's no longer the case. The COMEX could say we're not going to accept buy orders and the price go to $3, but Shanghai goes over $100. What will happen is the rest of the world is now more powerful, if you will, than the U.S., where it used to be the U.S. was more powerful than the rest of the world. I mean, there's no way that they could outlaw buying on COMEX and expect the physical price to go down. Whenever you tell a human being that they can't have something, they want it even more.
And talking about the gold, is it a very similar story as well? I mean, with silver, of course, we're talking about incredible premiums that you're paying for that physical metal compared to the futures. But are we seeing a similar trend for gold as well?
You're seeing it in a smaller way. The Shanghai premium is much smaller. Uh, Understand that gold has been mined for thousands of years, and pretty much all the gold that was mined is still above ground. It's either in storage form or it's jewelry. It doesn't get used like silver. Silver, uh, when they pull an ounce of silver out of the ground, how many different uses are there for that? You've got solar, you've got medicinal, you have technological, you have jewelry, you have uh, just investors buying it. The silver that has been produced over the last few thousand years largely has already been used. There's not any big stockpiles, whereas gold, there are some very, very large stockpiles, and I think larger stockpiles than are being let on. I think Russia and China both have well more gold than what they're letting on, and I think the U.S. has far less gold than we say.
Today's episode of Palisades Gold Radio is proudly brought to you by our parent company, Palisades Gold Corp, Canada's leading junior resource investment vehicle, trading on the Toronto Venture Exchange under ticker symbol PALI, with equity and warrant positions in over 200 companies, ownership of mineral projects and royalties, and a significant stake in newfound gold. Palisades offers investors powerful, leveraged exposure to precious metals, uranium, copper, and other critical minerals. Palisades shareholders directly benefit from our team's extensive industry knowledge and access to deal flow, opportunities historically reserved for a small group of investors. To learn more, visit us at palisades.ca and join us in our mission to level the playing field for investors. Now, back to the show. Interesting point you're making there with silver. Of course, it is an industrial metal. It is being used, and it also is oftentimes a byproduct when it's being mined, isn't it? So, ramping up significant mining capacity is hard to do as it is a byproduct, and the cost is oftentimes carried by lead or zinc or any other material.
Yeah, it's a very inelastic supply.
It's an incredibly interesting market from that perspective, that's for sure. I would love to pull that thread on gold remonetization for a second longer. You mentioned that BRICS settlement currency that is being floated currently, partially backed by gold, potentially the rest backed by fiat currencies in these BRICS countries. Do you think they will likely see that settlement currency actually be installed over the next few years?
It certainly looks like it will. I mean, what they've talked about in the past, they've held pretty much to the timeline. We don't have a timeline for a final release, but the weaker the U.S. gets, the easier it will be. The easier it'll be to bring that currency forward. And day after day after day, the U.S. is getting weaker because, I mean, we're paying what? We'll pay probably 1.5 trillion in interest this year, and add an additional at least $2 trillion to the debt pile. And I guess you could say debt weakens knees.
That weakens knees, all right. And the incentives, of course, for the US also seem to be aligned with remonetizing their gold to clean up the balance sheet and make this interest problem that you're outlining look a bit less worse. Do you think this BRICS settlement currency could force the US to remonetize as well?
If we were to cover the outstanding debt with the gold that we say we have, you're talking close to $150,000 an ounce. That's where the price would have to go. But that's assuming we have 8,300 tons. And I personally assume that we do not have 8,300 tons and that gold has been going out the back door for years and years and years. 1956 was the last year there was an audit.
Yeah, well understood. And talking about this brick settlements currency that could potentially, remonetize gold through a different system, what type of shock waves would it send throughout the precious metals ecosystem?
It's not just precious metals. You're talking about trust. Gold is money. It's the only currency, gold and silver, the only currencies that you can trust. Everything else is freely printed. Everything else is fiat. So the shock waves will be one of trust, and the shock waves are not going to be held just to the precious metals markets. It's going to, if silver fails to deliver, and I fully expect silver to fail to deliver in both New York and in London, but when it fails to deliver, that is going to affect all other derivatives because everything runs on trust, and it will probably create much, much higher interest rates in the US because borrowing is done based on trust. And if trust is collapsing, then we'll finally have a risk premium for owning US paper.
Interesting that you say that you fully expect silver to fail to deliver, at least for there to be a default on those contracts outstanding. How close do you think we are to that edge, Bill?
Let's see what happens over the next 30, 60, 90 days. Because what's happening,
You think it could be that close?
yeah, absolutely. What's happening, and this has been happening now for the last couple years, is that it used to be that say 100 contracts were standing for delivery on first notice day, but by the end of the month it'd be down to 10. Now we have 100 contracts standing for delivery the first day, and by the end of the month it's 200 or 300. So the buyers are coming in during the month and saying, okay, I'm buying the contract, I want the metal. All it would take is one big buyer or a consortium of big buyers to come in and say, I want my metal, and it's completely game over because the metal does not exist to deliver.
Incredibly interesting to hear how tight that market is. And talking about those players that have stepped up and really are starting to take physical delivery, do you have any insight on who those players might actually be?
I think you're seeing a lot of family offices do that. It's big money. For years we saw the retail market in the United States was a big buyer. The retail market is nothing now. The retail market is not even a tailwind. This is institutional money. I mean, these are hedge funds, these are private family offices, and in some cases, sovereigns. Look at Russia. They declared They declared silver a strategic metal, and they're buying it. Look at the imports into India. And those are official purchases.
Yeah, the official purchases you might suspect could be lower than what they actually purchase.
That's hard to say. You could look at it from both sides. Yeah, there's obviously reasons for buyers to lie. I bought more than I bought, or I bought less than I bought. It's hard to know, but the bottom line is we're seeing massive demand. We're watching inventories deplete, and at some point in time, there is a tipping point, and that tipping point will be a failure to deliver.
Well understood. And transitioning to some institutional parties that are paying or buying significant amounts of precious metals. For example, Tether Gold is a new buyer that has stepped in and is buying incredible amounts of gold. Do you think this might be a potential future for precious metals? Private currency backed by crypto.
Yeah, it's a game changer, but how long can they do it? Where the supply is going to come from? The supply is not there. The way to fix this is to raise the price massively to entice some people that have bought to sell. Because right now, anybody who bought physical metal has not been a seller. I guarantee you there was no big tranches of silver or gold that were sold yesterday. Physical metal. That was all paper. And actually, you can see it's all paper because the Federal Reserve lent what, 17 billion on Thursday night, and then they lent another, what was it, 34, 35 billion over the weekend to the banking system. And where would the stress have been? It would have been in silver and gold. Look at the price of silver on Friday. It was up what, $758, something like that. So those shorts had margin calls. The Fed helped them meet the margin calls and gave them enough to pile more paper on. The only problem is they can't print silver. They can't print contracts that have silver attached to them to deliver. They can sell contracts all they want and depress the paper price, but that is not going to satisfy silver, which is actually used.
Incredibly interesting, Bill. And I believe you're also a broker working together with retail and institutional clients selling precious
Right.
metals. What are you seeing there, funds flow wise? Are a lot of people selling or are you seeing buying currently?
Yeah, for a good part of the year, I took more sell orders this year, 2025, than I had cumulatively from 2010 to 2024. So there was a ton of selling. And I did query pretty much all of my people that were selling, and I asked them why. And the vast majority, probably 75, 80% of them said, I need the money. I need the money to live on. I got bills. I got this. I got that. You had some people wanting to buy real estate or buy other things. Uh, Now, what's happened in the last, call it 2, 3, 4 weeks, is that's turned. Retail is now buying. The one sector that is still under heavy pressure is junk silver. And the reason being, back in the 1970s and 1980s, the only way for an American to buy silver really was buying junk pre 1965 dimes, quarters, and a half dollars. Now, those people sat on losses for 40, 50 years, and a lot of that metal has come back. I mean, there's a ton of sellers, and what's happened is dealers, because they were getting flooded with metal, they backed away price wise, and as they backed away and made the discount larger and larger, then that metal was going to refineries to be refined into 99.9 silver, and they pocket the profit. But that's the pressure in the retail market, is selling of junk silver, which is a great opportunity if you're looking to buy silver. Junk silver is now the cheapest form that you can buy, and hands down, it is the best form for an American to own. It's the smallest denomination, which will be best for barter. It can't be counterfeited because they can't be shiny coins. These are in people's pockets. They've got to be scruffy. Uh, it's U.S. Mint lineage coin, so it's something that came from the U.S. Mint. Let's see, we have smallest denomination, U.S. Mint lineage. And it's totally readily recognizable. I mean, if you try to barter with say a 1 ounce buffalo or a bar or something like that, there's always going to be a question: is that real? But if you got a 1964 or earlier dime, quarter, half dollar, Americans know what they look like. And if the date is 64 or earlier, you know for a fact that's proof, it's authentication that it's 90% silver.
Incredible insights on some bargains in the physical allocation space. You know, silver recently has truly gone into the mainstream. It's covered on the news channels. Even Elon Musk is tweeting about silver. China has recently applied some export restrictions on silver. Do you think this is all fuel that's added to this burning fire, or is this perhaps a signal of that we might be closing in on the top?
I see no way that we're closing in on a top, because the uses for silver are expanding. The supply is not expanding. We're already in a structural deficit. Uh, Both gold and silver. Let's talk about leverage for a second. The carry trade was used to support financial markets for 30 plus 40 years. Uh, Leveraged capital has been used to support the equity and the debt markets. And it's also been used to suppress the gold and silver markets. So when credit breaks and there's margin calls, the margin calls on stocks and bonds will force selling, whereas the margin calls on gold and silver will force buying. It'll force buying from the cappers, the JP Morgans, the Bank Americas, the companies that are short and have been short silver. Their way to exit the trade is to buy, and that will create massive upside pressure on the metals.
Bill, for a generalist investor watching this interview that might not have a position to precious metals just yet, first question would be, is it too late to, dip your toes in and build up a position? And the second question would be, how would you think about starting up a position right now?
No, it's not too late, because when the fiat currencies truly break and zero out, gold and silver will be the absolute core of whatever comes forth after that. So no, we're still early. We're early in the game price wise. Time wise, I don't know, because we could have a failure to deliver this month, next month, whatever. When it fails to deliver, then it's game on, or it's game over actually. So you'll see the price of silver, the price of gold go to where it should, unfettered by derivatives, unfettered by futures contracts that are naked, have no gold, no silver behind them, but they're sold. The last part of your question, if I had nothing at all, I would start with silver, because yeah, it's nice to hold a 1 ounce gold coin in your hand, but it's also probably nicer to hold 60 ounces of silver that you're going to be able to use when a system breakdown comes. You're going to be able to use silver. Farmers understand silver.
Well understood, and thank you for sharing those insights, Bill. You mentioned earlier fiat currencies truly break when fiat currencies truly break. Do you think that is an inevitability, or is it more of a high probability currently?
History tells you it's 100% guaranteed. I mean, there's been no fiat currency ever that's lasted any longer than the US dollar has lasted.
All right. So you think just all fiat currencies inevitably are trending towards zero, and therefore precious metals is the perfect way out?
Yeah, I'll leave you with this. When people ask me, how much metal should I own? How much should I put into gold and silver? My standard answer, probably for the last 5 years or more now, is you put into metal whatever you don't want to lose, because the rest is at risk. And I don't know if you've followed the Great Taking or read about it, but that is 100% factual. Those laws are on the books. And when institutions go down, they're going to take their clients' money with them. It's on their balance sheet.
Yeah, so what you're outlining here is if you cannot hold it yourself, it's not written down in your name truly, governments might seize it in a case of a severe liquidity crisis.
Not governments. Read the Great Taking. When you deposit money into a bank, you're no longer a depositor. You are legally classified as a lender. When you put money into a brokerage account and you buy stock, that stock does not go into your name. It goes into the broker's name for your benefit. But if the broker gets into trouble and they fail, guess what? Those assets are the broker's assets, not yours. So it's not government stealing the money. It's companies that go bankrupt using the current bankruptcy laws to steal your money.
Good distinction, Bill. Is there anything, looking out into 2026 that we're missing for a great outlook for the precious metal sector?
I think it's pretty obvious. Something has broken. I mean, you're watching silver move $3, $5, $8. Yesterday's move was from top to bottom was like $12. Now we've recovered more than half of that today. Something has broken. The volatility has exploded, and the problem with volatility is silver's a leveraged market, and you've got so many more paper contracts sold for every 1 real ounce that exists. It's a game of musical chairs with one chair, and you got 300 people walking around that chair.
All right, Bill, is there anywhere you would like to lead the viewers still watching, a website, anything?
Oh yeah, you can find my work at just simply billholter.com. You can contact me on that. There is a great icon up top. It's called Grizzly's Corner for those people who want to prep or have already prepped and want to see if they've got holes in their plan. This guy would go into Idaho into the hills with a pack of mules for 6 months at a time, and come out no problem. He's written a bunch of good articles. There's a bunch of links on there for products that he's used. It's a great resource. Um, and there is a contact button on there if you want to contact me regarding uh, buying or selling gold or silver. My business email is bholter@proton.me.
Perfect. Bill Holter, Mr. Gold, thank you so much for your time and your insights.